Friday, September 15th, the Ides of September. As the copy near this video beats to death, there's a lot of stuff going on, but there's not a lot of stuff going on that matters. As far as interest rates go, and what's ahead in the near term for mortgage rates, the biggest mover is overseas. If the European Central Bank backs away from its stimulus, that's going to tend to cause long-term rates to rise everywhere. The U.S. economy is in a very nearly steady state. We're very close to something just over 2% GDP growth. All of the different inflation models are all below the Fed forecast, and they're not moving. They're not rising the way the Fed expected. So there's some question about whether the Fed will raise its overnight rate at all during the rest of the year. But watching the news is enough to just jangle the teeth out of your head, trying to figure out what's important and what's not. And this morning, the newest missile launch from North Korea had no impact at all. Didn't do anything. The futures markets last night, when Europe opened at my bedtime, didn't even flicker. A bomb in the London Underground, nothing. Old hat, we're used to this stuff. The political stuff is difficult to quantify in terms of market impact. The entertainment is fantastic, but the actual impact is hard to nail down. The next pending adventure is this business of tax cuts and tax reform. If we get a significant tax cut, rates are going up. This economy doesn't need a tax cut. We already are running a $600 billion or so annual deficit. It's going to rise mechanically every year until we get entitlement spending under control, and that circles all the way back to the cost of health care. Not coverage, but cost. So if a tax cut comes, the Fed is going to see it as unnecessary, stimulative, likely to overheat the economy, and the Fed will have to lean against it. And it will precipitate some chaos involving appointments to the Fed. Mrs. Yellen's term expires in February. We need a new announcement soon. We also need some other Fed governors. The business of tax reform is different than cuts. Congress may attempt a shell game of tax cuts and tax reform, which adds to the deficit but pretends that the economy is going to grow faster, which will create more revenue, so it won't really add to the deficit. That would hurt too if they try that again. It's been tried before. My hunch is that Congress isn't going to go along with it. If Congress passes anything, it's going to need to be revenue neutral. I have compassion for my Republican friends, as I do for my Democratic friends, that they've been out of power for years and thinking away in their own echo chamber. And the ideas that they've got for tax reform are uniformly bad ideas. Tax reform, the idea behind it is you broaden the tax base and reduce brackets. So more taxpayers, lower rates of taxation. We did that in 1987. We tax anybody with a heart rate today. And we reduced brackets in 1987, but we're so revenue hungry that brackets have gone back up since, and there's no basis for a trade. The second element in tax reform is to remove from the tax code gains, incentives that cause business people especially, but individuals as well, to rejigger their economic events just to suit some funny business in the tax code. And in the copy next to this video is a rundown on what those ideas are and why they don't work. The markets are behaving, the markets are treating tax reform about the way they reacted to North Korea and a bomb in the underground in London. They don't care. The markets are behaving as though they don't think anything is going to happen. The political circus around it may have an ideal outcome in that there's no telling how much harm might be done if Congress tried to do something else and instead spends the rest of the year doing nothing. On that note, a week before fall, do have a good weekend.